Okay, thanks, Rob. Rob, I can't read questions or when everybody, if somebody's saying anything, you just give me okay that you can see the screen and you can hear me. And we'll get started. Okay, great. All right, thanks all for coming, spending some time with me after the close here and go through this presentation. My goal is to teach you a plan for trading in intraday. There are many ways to do it, of course. I'm going to show you one way. If you have questions, ask as we go along. I welcome them and want you to understand everything that I'm talking about here. I'll give you, to start, a little background information on Pristine and myself and, how I got started in doing this part of my learning process and transition, and how I got to, where I see things today, and how I interpret the charts so that you understand that. So let's get going. As I said, if you have questions, put them out there. All right, let's get used to this software. All right, here we go. All right, a little bit about Pristine and myself. I started learning about the markets, knowing absolutely nothing, sometime in 1989. Was turned out to be a long process. There was really not much information out there at the time, but got through it, learned, put together a method, and it's what we teach today at Pristine. I've written several books. Give me a second here, guys. I know there's a pointer in this software. Here we go. Should be able to see a little red dot there. Several books here. This is the latest. It's a quite in-depth book. Goes into a lot of detail about how my views on technical analysis and explanations of that. Some of it we'll cover here today. If you're interested in learning more about that, pick up the book. There's a great amount of information there. I've been doing this a long time. I've traded live at these expos, won them 6 times, probably did them 6 or 7 times. Odds were on my side that day, but I'll show you part of, what I was viewing at that time in these charts. Been teaching and educating others for about to be 20 years in September. This is hedge fund managers have come to Pristine for education, market makers, people like myself in 1989 didn't know anything about the stock market. I say virtually all of our competition, many of our competition out there that are educating people today at one time were Pristine students. It's a testament to Pristine and how long it's been around in doing this. And Pristine's been voted by those that have come to us for education in 2012 and 2013 as the best education out there. Of course, we believe that. I believe that. We put a tremendous amount of effort into teaching and making those that want to learn to do this on their own self-reliant. That was my goal when I first began to learn about the markets. I did not want to rely on anyone, and that's how you should want to approach this. And while there are services out there like Pristine, your goal should be to learn from them, decide what it is that fits your personality, your investing or trading style, and use that on your own. Just like running in any other business, the trading business is no different. You need education, you need experience, you need a plan on how you're going to run that business, and education services like Pristine can help you accelerate the time to get to that goal. Okay. Now what I think. There we go. All right, the disclaimer. You can lose money doing this. It can be dangerous. There can be a lot of risk in trading and or investing and entering the markets. As Rob mentioned before, anything I say here or he says should not be construed as a recommendation to buy or sell. In addition, I am a registered representative with Lightspeed, and Lightspeed is Pristine's preferred broker. They offer excellent service in the brokerage industry, I believe to be among the best. And be aware that there is risk in the markets, and it's like we teach in our courses. Anything that you do, you should have full knowledge of it, understand it, and do it because you do understand it, and you're making a decision, not following anyone else. You know what? I started with this type of analysis. I shouldn't say started. After a little while, after beginning to delve into the markets and knowing very little, I, like many, are susceptible to thinking that the markets are extremely complex, and it's this type of analysis that's required to do this. So I did spend time learning about cycles, Fibonacci retracements and extensions, and drawing all of these lines, like you have here on this chart, connecting the dots, so to speak. And one book that I read many years ago that began to turn the light bulb on while I was learning. And I was open to others' views because I was searching for the truth, so to speak. And I read a book called Winner Take All. I believe the author's last name was Gallagher. And it was about trading in commodities and using fundamentals. And he was of the opinion that those that used technical analysis really had no idea what they were doing. And he said a technical analyst, in essence, was like a child that had not grown up and was still connecting the dots in the books that our moms would give us when we were young, and we would connect the dots and the numbers, and it would draw a picture. And I thought to myself, you know what? While this is a ridiculous statement, because I truly believe that, technical analysis was a viable way of making decisions, and I was searching for that and putting it together, it rang true to me that how could I connect points on a chart and predict where turning points would be and support and resistance, especially when we start looking at what's on this lower left-hand side of the chart. And I said, what, this just doesn't make sense. And I was struggling, and I was like, what, this just isn't working for me. I'm not making money. I'm not understanding it. I'm not feeling confident about what I'm looking at with these various tools. And it began to evolve into what I'm going to share with you today. So while I was looking at those more esoteric things, I was also looking at what's called the simpler technical analysis here, with, as I said, trend lines and indicators and what was overbought and oversold and combinations of indicators. And I came to call this, eventually this was like a spaghetti screen. And I was like, if I put enough lines on the chart, well, certainly it's going to catch a turning point. And someone can show me, hey, look at what happened here. I drew from one point to another, and the prices held there, and they rallied up to, in this case, a trend line that was broken, and that became resistance, and then prices fell to another line, and so on and so forth. And while the indicator was overbought, that happened, and that predicted the turning points, and it all sounded very reasonable at the time. But the more I delved into it and studied it and kept track of trades and buy and sell signals and so on. I just thought to myself, I realize it. This really doesn't work. There's no consistency here, and it's leading to more confusion. And when I thought, there are hundreds of these indicators, and I can change the settings of them. There's thousands of combinations. So what is it that I should be using here? Well, eventually, the thought came that just remove all of this stuff. Remove it from the screen. It's not making sense. You're struggling. You're confused. Stop doing the same thing and expecting a different result. As we all know, that's the definition of being crazy. So I did remove all of that. Went back to basics. Decided, whatever the news is, my job is to look at the chart, define support and resistance, and what is the trend, and then find tradable events, patterns, pattern recognition, pictures that would communicate to me to take action based on that. Now, when we talk about a trader's mindset, we do not grow up. We're not exposed to the type of thinking as we're growing up that's required to do this. And it's one of the biggest things that we all struggle with, and why it's said that, doing this is, depending on who you're listening to, 70, 80, 90% psychological versus technicals. Now, learning the technicals is essential. You need a method. But getting your mind to think as a trader, thinking about the odds of this setup working out, rather than an absolute, is required. And that's hard to do, because what we're taught, from infancy is to look at a situation.
Are you getting Joey or?
I hear someone else talking here. I don't know if you guys hear it. To look at a situation and make a decision about what's right and wrong in an absolute sense. Well, it doesn't happen that way with trading. And when I look at patterns, I began to realize that these are a reflection about what others are thinking. It's not just about a candlestick pattern, haram eyes and dark cloud covers and morning stars and such. I came to realize that those things really made no difference with those names. It was about what that picture meant. So as I learned the patterns, that's going to guide my thinking, and I needed to define, those pictures of buying, selling, and uncertainty. There's many times, whether it's in the broader markets or whatever it is that you're trading, it really doesn't make a difference. You might be any mini trader or trading commodities or forex. It doesn't matter. All of these pictures are a reflection of what other people are doing, and at times that picture doesn't really tell you much other than that there's a lot of confusion. And when you understand that and define it, the message is just stay away or go on to something else that is clear to you. So we need to define the trend, and where these pictures occur. That's what's going to increase the odds of their follow through. Now, lastly, and this isn't something we're going to have time to talk about today, but money management is the key to trading psychology. Once you have a method, you understand it, you understand, this the proper way of thinking. If you don't have a trading plan that includes proper money management, I think it's impossible to succeed at doing this. All right, and once you've done that, you gain confidence through experience in doing it and finding that the method that you're using works, and you find that you gain discipline and patience over time, because you've gained that confidence, and you give your plan time to work out, and you don't do anything until you have those setups.
shares are all over my legs. But
I don't know whose mic is on there, but you know, you guys could probably hear someone else talking in there. All right, so we need to determine the reference points, right, of support. And I have here demand. So that's the proper way to look at support. It's an area where there's going to be buyers, demand, that's going to potentially create a turning point. Resistance is where there's supply. And that's, you know, whether it's the markets, whether it's a stock, whether it's a commodity, it's all about demand and supply and those turning points. And then we look at the trend, you know, whether it's up, down, or sideways, because while we can see a prior high and we would recognize that as being a reference point of resistance within an uptrend, the assumption is that prices are going to exceed that high. Again, I say it's an assumption because we don't know absolutely, but we're playing the weight of the evidence in a sense. We're playing the odds to say, if I buy this pullback, the odds are that prices are going to exceed that old high, right? That minor resistance, if you will, because, you know, the trend is up. Now, another concept that you know, turned on the light bulb for me is what I referred to as a void, where there is no reference point of support and resistance. And why I looked at the charts and I said, well, what is the difference between one setup and another, whereas one will trend and one will be choppy and erratic, and I found most of the time it was likely that I would get stopped out. When there was no reference point there, and I'm going to show you examples of this to see the pictures because it makes it a lot clearer to understand. You know, the odds were that prices would continue to move in the direction of the trend. So I needed to determine, was there any reference points or not? And then determine, you know, is there a price pattern in alignment with this bias that I developed by looking at where the support was, the resistance was, what the trend was there a void, and so on. And then was there a pattern to take action? So the location of these tradable patterns, these pictures, are the key to placing the odds on your side. Let's go over some basics here. You know, I'd say, well, you know, Greg, I know this stuff. I've read it in various books, you know, and it's basic information. But folks, this is what you need to focus on, and we'll go through it into the charts to understand price movement and why it moves. You know, when we look at these reference points, support and resistance, we have a few rules. Right? They're not fixed prices. They're areas. And there's too much focus on being exact. Right? For example, Fibonacci retracements. To think that you're going to predict the exact turning point within a decimal point of whatever it is that you're going to trade with these lines on your chart, or them to actually be support and resistance, excuse me, it is, in my opinion, ridiculous. And I've learned that over the years, you know, by using it and studying it. But the basics of support and resistance is true. Meaning, when that support's broken, that area is likely to become resistance. And when it's broken, right, that resistance is likely to become support. So as prices come down to prior areas of support, right, my thinking is, hey, I want to be a buyer down there because that's where the demand is, and buyers stepped up before. And when prices come up to old resistance, my thinking is, or bias is, hey, I'm a seller there. Sellers there before. Odds are there's going to be sellers there again. I have to wait for a picture that I understand to happen there. And let me mention this, in that there are a lot of different ways to trade or invest, styles or methods, meaning as prices come up here, there are many others that are going to recognize that this was a turning point in the past, and some will just put an offer out there. I mean, you all recognize, on your level 2 screen, there's bids and offers. And those that recognize these old reference point put offers out there to sell. I don't know what their plan is after that. I mean, they could get run over and prices keep going higher, or they're in at a great point and prices drop down where they can take a profit down at prior support. What I'm going to show you is that in our style or method, we wait for some confirmation up here. And I'll show you different pictures, patterns that we're going to look for that are going to confirm these areas up here before taking action. So those that are willing to put those offers out there are going to create those pictures that I'm going to show you that allow us to take action. Now, when prices are trending, right, this old resistance should become support. So as prices pull back to that old area, I want to think, hey, I want to be a buyer over here. And that's why there's a little question mark. Where do I want to be a buyer? I don't want to be a buyer when prices are up here. I want to wait for the pullback toward that support where the demand is and those buyers are. If the trend continues up, I look back to that old high. That's where I want to be a buyer. Now, look at the way I drew this here. Right. I say, well, what changed up here? Looking at this picture of higher highs and higher lows is that this high barely exceeded the old high, which tells us or communicates to us that momentum is slowing down. Now, here's where if you're, someone that uses indicators, your indicator down here is going to show what's called a bearish divergence, meaning the indicator made a lower high where prices here made a higher high. I don't need indicators to tell me that. All I need to do is look at, how prices are moving. Now, when prices come down into this old area down here, right, you say, well, that's a deeper retracement. Do I still want to be a buyer? I'll say yes. Right? I want to be a buyer down here as well because this is where buyers stepped up before. But in this example, right, there is a higher probability that prices may not exceed the old high, or they might make a lower high at that time. So you want to be aware that when you get deeper retracements, right, the odds increase of making an equal high up here or a lower high or possibly even a changing of the trend. Now here's an example of what I'm talking about with a void. As prices moved up, first they gapped higher here. So you can see that there's nothing over here to stop prices from going down. Now that doesn't mean that they have to go down, but there's no reference point here. So how am I going to deal with a situation like this? Well, as prices begin to pull back, they might. Can I draw on this? Hold on a second, guys. Let's see. Yeah, I can draw on this. Prices pulled back here, and then they move back up. And this is what's called a pivot or a swing low. And when that happens, it creates a reference point here. So once you have a gap like this, the risk does increase of prices coming back into the gap. But a lot of stocks that'll gap in the morning, the strong ones won't fill the gap, so you have to have a plan how you're going to deal with that. And this is one way of dealing with it, is in letting it pull back and pivot. And we define that as at least having two bars to the left and the right there of that pivot bar. And once that happens, it's created some support. Buyers stepped up there once before, and in theory, they should step up in that area again. And this is where patterns come in, and the candlestick patterns. And when I see that, hey, prices went down and they pushed back up again, prices should then push higher at that point. And that's where it's doing. This is about odds and putting those odds in your favor by saying this is a prior buying point. Now I've got a picture of buying. Let's give it a shot here and buy. With a stop loss wherever you're going to put it, and then let's see what happens from there. Now, when prices push up and make a new high as they did here, we're thinking, hey, this should keep going up. And that's the idea. Strength should result in continued strength. Well, sometimes it doesn't. In this case, prices had gapped down. What was support, right? Should start become resistance, and here's a pattern that we're going to talk about here. This little pop up above prior highs and a reversal back down again starts this move. Now, once that happens and prices enter what I'm calling a void here, there's the potential for prices to fall quite a lot. Because where am I going to buy? Well, possibly here, but as prices fell on this day, and if I remember correctly, this was a daily chart, there was never a setup till here where there was even the possibility to consider, based on patterns and candlesticks, that I would want to even consider buying. So as prices came down here, there was just no pattern for me to act on, even if I was going to consider that. Okay? So these kind of moves typically end once they get down to a significant area of support, as they did down here. And that doesn't change the trend. That just increases the likelihood of stabilization. Excuse me. So with that in mind, those concepts, this is how we want to approach this intraday. This is one plan. Right? Use the 60-minute chart as the road, so to speak. This is where the power of the move is, right? Using this time frame. And those prior support points are going to be the stopping points to get on board the bus. Prior resistance, well, those are the roadblocks, but the assumption is that prices should be able to push up through them because of this upward trending move. And based on that uptrend and what I've already showed you, so those basic concepts, we'd be looking over here to say, well, what's going to stop this trend from continuing to move higher? What's over here to the left here? Is there any resistance? And if there isn't any, I'm going to assume that prices are going to continue to push higher. I'm going to look at a lower time frame here. I'm saying the 5-minute, but you can choose any time frame you want. Look for displays of the transition from sellers being in control to buyers taking control. So as prices pull back to prior lows, the green star here, I want to look for pictures or transitions. Now, in this case, you see the 5-minute was trending down and it begins to bottom. I don't need the 5-minute to be in an uptrend to take action because the 60-minute's in an uptrend. The 60-minute is pulling back within an uptrend, so the 5-minute during this time can be in a downtrend, and here's where you're getting that stabilization, and you're looking for the pictures on your smaller time frame in alignment with the trend and support in your higher time frame. Another pullback, another transition on the 5-minute time frame. There's no indicators, no waves, no bands. There's no confusion. Let's look at a few examples. So here's a 60-minute chart. We're going to go through, as we go through various 60-minute charts and looking for potential opportunities, we have to make some decisions. So as I look at this one, prices are coming down to an area of support. This says, I'm not interested here. Let's just pass. This, possibly prices might stabilize and turn. But as far as this pullback goes, right, I'm not interested in this. I could have been up here if I was looking at this and looked at a lower time frame to see, is there a potential shorting opportunity up here because of this gap down? But if I come across this chart, well, then there's just nothing to do. I come across the next chart. So here's another one where prices were just going sideways. They failed to push up through the old high. Now they're down at support. I'm not interested in this either. There's nothing to do here. Where it says, but I would be interested if prices move down below the support, because then they would be entering what I call this void area. There's this sideways consolidation of what was support should now become resistance, and my bias would be that prices could continue to drop, so I could look at a smaller time frame to look for pictures, setups that were in alignment with that bias. So what I might do is just set an alert down below this area here. Not even set an alert up above the top of this area there, because maybe prices would push up through it, and then I'd be interested in that 60-minute chart as well, since they cleared that old resistance. So now prices broke through support. Now I'm very interested, because see how prices moved up. They went sideways. They tried to move higher. They moved down. They failed on a retest. Now they've broken through what was support. Odds are high that prices could come down here, maybe beyond. But here is my reference point where turns were before. So I'm interested. I'll keep this on my radar screen and look at a smaller time frame for opportunities. So I'm looking for situations like this where 60-minute is trending higher, and I'm looking at a smaller time frame for pullbacks, right, which this could be this pullback right here, right, the bottom of this tail right here. So the 60-minute chart could have a very bearish pattern, or bar, meaning this would have been a big red candle at the time of this pullback. And this was something that I struggled with many years ago, meaning I would see a 60-minute chart with a big red candle. It would be in an uptrend, but that big red candle would make me, hey, prices are going to go down. Well, not necessarily. A bearish candle within an uptrend is something that should be ignored. It should be an opportunity, a pullback in a smaller time frame where buyers are going to step up. So I'm looking for setups, pictures like this. So I have this marked as a little shakeout, meaning this red candle here. This was a red candle breaking below these lows. It popped back up again. I like that picture on a smaller time frame within an uptrend on a higher time frame. I like multiple bar pullbacks into what was resistance to become support. It might look like this, a little bit different, and then the reversal, but it's all within an uptrend. These are in agreement. The question always comes up, when is it okay to trade against the trend? Well, sometimes we can do that. And what we want to look for is here as prices were trending up. It says this is our higher time frame. And what we want to look for is a situation, and look at how I drew this. You know, it's not drawn like this arbitrarily, meaning these moves are about the same, and they're controlled, and then prices begin to accelerate. This is what happens near the end of a move. Prices accelerate. Here, traders could be investors if we were looking at a daily chart or a weekly chart. Right? They're still apprehensive. They're uncertain about this trend continuing. So as prices move up, it's like, well, let me take my money. And prices pull back. And buyers say, oh, it's cheap. Let me buy it. And then pushes up again and pulls back and pushes up again and pulls back. That's what makes the higher highs and higher lows. But near the end of a move, confidence increases. And the pullbacks become shallow, almost at times even non-existent, and prices begin to accelerate higher, and they create that void that I spoke about. And then as prices push up, and especially if they come into an old area of resistance, this what I call this the supply area, and then say, hey, you know what? This is a point where odds are there's going to be a turn because of this price action here. Well, now it's time to go down to a smaller time frame and look for a deep retracement, possibly a lower high, the break of support, a move back up into that support. There's now resistance. Maybe I get a reversal candle up there, and that presents an opportunity where the odds are high that prices could pull back, possibly down toward this area here. So that's our plan for trading against the trend. When prices have accelerated, and we call this a climactic sell setup in our classes. And then when prices begin to turn, we could look at a smaller time frame and look for patterns like what we call a pristine sell setup, PSS, possibly an M top, and look for a continuation for prices to move lower. So as I said, these candles, these patterns, they're a reflection of what other traders are thinking. And here we have is on the upper left, we have a wide range bar to the downside, breaking lower. Lower left, a wide range bar up. And on the bottom here, lower right, you've got this candle breaking to the downside within this series of lower moving candles. Well, if you've ever been in a situation like this where you sold a breakdown and that big red candle on the upper left turned into what we call a bottoming tail, BT stands for bottoming tail, you know how that feels. Like, what did I get myself into? This isn't doing what it was supposed to do on a breakdown, and now there's the odds that prices are going to move up. Now, especially right, if this was actually in an uptrend, you might say, well, why would anybody short a breakdown within an uptrend? Well, those are things we may not know. There's a lot of different styles, ways of trading, and why people do things. We're not going to know why others do all of these things. But when I see a picture like this, and prices are trending higher, and there's no resistance over to the left here, well, that creates a good possibility for prices to then move up from there. I like that picture when it happens. Well, that wide range bar, that big green candle, should turn into a topping tail candle. And if prices, in this case, were in a downtrend, and ideally at some resistance over there to the left, well, this would create a nice opportunity for prices to then move lower. And turning points can look like this as well. And this is where, you know what, this whole idea about candlestick names can become really confusing. If you start thinking about hammers and inverted hammers and shooting stars and thinking that, you know what, you need to see that particular picture, it's very limiting. And what I mean by that is this candle here, that bottoming tail candle, where prices went down and right back up again, communicates the same thing as that lower right picture. Prices went down, they came back up again. So the location of where this kind of price action occurs, whether it's a bottoming tail or whether it's a two-bar reversal like that, means the same thing. I don't care what you call it. It just tells me prices failed to go lower. And if I can find these pictures within a trend, it's going to put the odds in my favor. I can't see if any of you people are commenting or asking questions. You know, if you do have, throw them out there. You know, Rob will post them to me, and I'm happy to answer. But I'll continue. Unless you do, if you have questions at the end, be happy to take them. So this is what I'm looking for. These pictures of what happened to others where they're getting caught. That is one of my favorite setups or things to find. You know, I'm often asked, and other presenters at Pristine are often asked, what's your favorite setup? What's your best setup? Not that means they're all going to work out, but you know, what do you find is a good setup that puts the odds in your favor the majority of the time? And this is what it is for me. You know, where I can find a situation like this where, you know, for whatever reason, other traders thought that prices were going to go up. And you know what? Maybe they could have been right, but for what I'm looking for, as I've explained this, you know, the scenario for you, the plan, when I can find a picture like this where it tells me, hey, these longs, these traders that went long, they got clobbered up here. And this little break above these highs here, all of these traders that went long and bought are now holding losses. And hey, what any of us are going to do, right, should do when we get caught on the wrong side of something is get out. Well, this is the type of situation that I studied years ago, and we've all said this and thought about it as well. If I only would have reversed on that trade, my goodness, I could have done so well. Well, that's a great thought, but how do you do it? Well, by studying the trades that didn't work out, and you could have done well on, and finding what is common between them. So in this situation, I recognize this as part of my plan that we've gone over, that here, this picture tells me traders are caught. The odds are prices are going to go lower, so that's a great setup. And this works on all tradable instruments. Right? I'm giving an example of an in-muni contract here, but this is all about other traders, what they're doing, human nature, fear, greed, supply and demand. And so it doesn't matter what you trade. You trade stocks, e-minis, forex, you know, soybeans. It doesn't matter. And you can find pictures like this in alignment with higher time frame trends. The odds are going to be in your favor that prices are going to continue to move in the direction you believe that they would. Now we're looking at an example as this would be a starting point for a potential setup. And so I defined the trend, reference points of support and resistance I'm waiting for a confirming pattern. This is a daily chart. I've marked here a setup that we would look for when prices are at support. We call this a 1, 2, 3 continuation setup, and it's a big green bar, a little inside bar, and then it continues up above the high. But here prices pushed up into this area where they dropped from twice before. And notice how prices accelerated up into this area. Remember I showed you that line chart, how prices began to accelerate? It tells you that, hey, traders are getting confident. They believe prices will go higher. And they're doing that right into an area where it turned before. Why are they doing that? I don't know, and I don't care. It just, I just know that this is in an area where it presents an opportunity for a turning point based on the past. And this is what happened the next day. Here's that acceleration into that prior area of resistance. And within this green bar right here, prices were consolidating into the end of the day. Obviously, you can't see that in this bar, just straight up. But looking at it on a 5-minute time frame, it was going sideways into the end of the day. And based on this daily chart, right, prior to the red bar, right, that didn't exist, when traders were looking at it on this day, they think that prices are going to continue to move higher. Well, maybe not. What happened was prices popped up, longs got caught on an opening breakout failure. Those that bought the breakout, think to myself, what are they going to do now? They're caught. It's into an area of resistance, supply, where the sellers are. Longs got caught. Those that bought the prior day say, hey, I think they're going to be thinking, hey, let me take the money. And at this point, it's not working out. And that creates new opportunity for those that recognize it, right, where there's the potential for prices to move lower. And this was the symbol of the stock IRM, and while it bounced up later in the morning, it did go on to make new lows on the day. So this kind of a pattern on the 5-minute, right, even though this is a pattern I could teach you to trade down here at support, but not up here. So that's a key point to be aware of. This is where a lot of intraday traders get caught. And they recognize this type of a pattern, and it's called a W pattern. They recognize this kind of a W pattern, but it's not in alignment with the higher time frame, and they often get caught after a little move up from that buying pattern. They get caught, and they get stopped out. Happens a lot. That's why you need that higher time frame to be in alignment. Little advertisement for Pristine, folks. Right? A lot of students, right, with testimonials like this. Somebody 200% performance gain. Well, I wouldn't say that that's the norm. They've done great. James says it's working. A lot of winning trades there. They just love the course. So when I say, if you like what I'm hearing, come into our workshops that we do. Most of the time, 4 days a week, except for Fridays. We're not done. I got more stuff to show you here. But come to Pristine and check out what we do. Come into our free workshops. There'll be one going on tomorrow at 4:15, and find out more about what we do. Here's an example, a little different than what we looked at. Here's Caterpillar. Right? This was at the end of April. A 60-minute chart. Prices have pulled back here into support. My belief is there's going to be buyers down there, so I'm interested down here. On my 5-minute chart, I look for pictures that show me buyers are beginning to step up. And notice this turn down here right at the low. Look at the volume. Great sign. Prices push up. We talked about how support gets created, and I mentioned, hey, here's a pivot or a swing low. We have that support point. I love these little wide range bar right there. Igniting a move. We call this a wide range bar, igniting a move off of the low here. I've got an arrow here on this little 2-bar reversal. And I like that because of this consolidation. And as prices break lower and then pop right back up again, it tells me that there's a strong bid under prices. And so when you look at that level 2, which I'm not showing here, you look at your level 2 on the screen and you see this picture. What it's telling you is, hey, there were a lot of traders that were bidding down here, and those that didn't get filled at that bid, they had to become what we call active buyers, meaning, hey, they realize, hey, this is strong. I would have hoped to get it a bit cheaper, but if I want in because I believe it's going to go up, I'm going to have to become an active buyer and take the offer. And, then you just manage from there. But the odds are in your favor over here that prices are going to move up. You can drill down to your smaller time frame. In this case, I'm using a 5-minute, and look for those pictures of buying on the smaller time frame. JP Morgan. That's the beginning of this month. So you could probably go back and find this chart where it had gapped down that morning. What was support should become resistance. And then here's that same point on the chart. Over there to the left is this resistance area. Now I'm looking for pictures that I understand. And so there's the first turn on the 5-minute. Buyers step up at the old low there. And now I would say that for me, looking at that, that's the picture of money. And I said about the psychology of candles. Think about what that candle looked like before it became a little topping tail and that little breakout failed. If you could find a couple of these a day, that's all you would need. Right? Of course, finding them, you have to find them. It requires focus and looking for your setups and getting ready. But this puts the odds in your favor. There was a break. There's a move up into a resistance area, smaller time frame. Traders have gotten caught. Odds are prices are going to go lower. So here's an example with a currency pair. It doesn't matter. To trade, it's all the same thing. What was support is broken, should become resistance, where sellers should show up. And that's your bias based on the higher time frame. And here it is on the 60. That's the higher time frame. Here's the move up into resistance. And there's that topping tail. That's that reversal right up there at that resistance area. And a few more slides here. I'm saying you can do this. And the question is, can you define situations where the odds are in your favor? The higher time frame here is trending down. The gap down There's a little failure there. There's a move lower, and then moving down to a lower time frame, looking for resistance areas and patterns, right, that set up that suggest that prices are going to move in the direction of the higher time frame. Here's one that I captured earlier today, and this continued to move higher if you were watching it. It was Twitter, and here was the big volume reversal earlier in the month, and if prices retested it, earlier this week. Well, we know that today there was an upgrade and prices gapped up. Well, the gap up, that creates that void that I talked about, right? Odds are prices are going to pull back. I mean, sometimes they do just move up like that, but when they pull back into what was resistance, it should become support. Right? Basic concepts, guys, folks. Basic concepts, they work. Should become support. Look for a pattern. I know it's a little difficult to see, but there's a bottoming tail pattern right there. That's where that type of a candle makes perfect sense to me, because buyers should enter here and try to push prices higher. There was a little retest in this one up to what, about, I'm going to go 30, almost 34 today. This went up to almost 34. So if you look at this on an end of day basis, you've got a wider green candle based on that. Those of you that are Lightspeed clients, as I said, Lightspeed is our preferred broker. I mentioned to you earlier, I am a registered rep with Lightspeed. Because of our relationship together, Pristine does give those of you that are Lightspeed clients a great deal, privileges. If you contact one of my counselors, just email counselor@pristine.com or call, you can get our Pristine Day Trader letter. That letter comes out every morning prior to the open with a little market commentary, a couple of stocks that are gapping with charts for you to take a look at. We'll give you 25% off any Pristine trading course as a Pristine client. We have a reward program, meaning as you're trading, you can build up points and use them for services. We do, like I said, we do webinars usually four times a week. Have market letters, and we have ongoing education. For some of you that have taken our advanced course, I do sessions every other Tuesday with students, and we go over charts and the broader markets and different setups, and those students will often share their trades with the group, and we'll go over them and discuss what was great about the setup or what was missed about the setup. There's a question that was asked, does volume play any roles in the trading style? Absolutely. Again, in this short discussion, this is not something I could get into, but I will tell you that, volume is an additional piece of information that's very helpful in looking at the past. And I did point out a couple of charts with the higher volume that occurred with them. But in the moment, where the trade is beginning, you're going to be part of that volume. So, volume is helpful in the past in saying, hey, there was a lot of volume, like I showed in the Twitter. All right, let's go back, and I think if I can go back here on the chart. Here. The volume. When you have prices that are declining like this for an extended period of time, and then they accelerate lower. Remember what I said about the acceleration of the move happens near the end? Prices here accelerated to the downside and the volume exploded. That was a situation historically that typically will end a move. So here was the retest on lower volume, and then the turn happened today. It started with a gap up. I forget who came out and said, hey, this is a buy now, very timely, versus some other firms that will often say, hey, it's a buy up here, where it's up at resistance. If whoever did it today was spot on in their timing on this retest down here. So yeah, volume does come into play, but based on your action in the moment, right, you really don't need to have volume as something for making your decision in the moment. It's something that you'll use as part of your analysis from the past. Again, as a Lightspeed client, we offer some great advantages. You come to our workshops that we do during the week. You can give a counselor a call. You can talk to them about our classes or packages. And you get a great discount as a Lightspeed client. Take back control. Take back in your control. I mean, many of us have looked like this, if not all of us, at some point in time where we're going through the learning process or got into a trading situation, didn't adhere to our stop or didn't even know what a stop loss was, and possibly taking losses that we never could imagine was possible. I've been there. And that is the pain that reinforces the fact that you need a trading plan. You need a method that you can use and rely on that puts the odds in your favor, like what I showed you today. And it doesn't have to be complicated with all the indicators and trend lines and Fibonacci's and cycles and so on. As I said at the beginning of the presentation, I studied that at the beginning, and it just leads to, in my opinion, mass confusion, and is a huge reason why so many fail at doing this, because they just make it too complicated. It doesn't have to be. That said, I hope you see that this is a great start to understanding price action and putting together an initial plan. Remember what I said at the beginning too, money management is a key. We didn't have time to get into speaking about money management today, but we often do in our free workshops, and we certainly have a very in-depth class on money management. If you haven't taken one of our classes, consider it. It's about education, regardless of what you do, whether it's trading or whether you're going to be an accountant or a doctor. Hey, you need education. And then it's about practice and gaining experience. You need to put together a trading plan. And I hope you've picked up a few light bulb moments here, as we call them. If you like what you've heard, give one of our counselors a call, or counselor at pristine.com. Find out more about what we do. And it says we're here to help you achieve your financial goals that you want to set for yourself. All right. Guys, I hope you've enjoyed this. And come visit us. Spend some time at Pristine. Learn more about us. All the best to you. As Lightspeed clients, Pristine's here to help you. And have a great night.
Okay, thank you very much, Greg. That was great. I definitely learned some things myself. I hope everyone else did as well. We look forward to having you present again, and we certainly will put up the webinars on the website for everyone to